and you pass, you will owe something called the probate. Well, you won't, your estate will owe something called the probate tax. For example, let's say you have a home and the home is worth 150,000. If that home, if your kids want that home, they would have to pay that probate tax, which is approximately about 15%. If they don't pay it, then that property gets sold at an auction. I've seen that happen. It happens. The way you protect yourself is with a proper estate plan. Here, for a living trust, it only does its job if you and your spouse become incapacitated, or if you pass away. In the trust, it is detailed how your assets are to be distributed amongst your beneficiaries. At the same time, if you have minor children in your trust, I can do either a custodianship or I can create a subtrust depending on your children's age, which is good because God forbid something happened to you and or your spouse. Now we list somebody in the trust who now becomes their guardian or their custodian, and you can avoid the DCFS coming in and getting involved and the court fees and everything else that's involved with getting custody of a minor child. Otherwise, they would have to hire counsel, go to the court, to the probate court, and explain to the state of California why they are why the minor children are better off with whoever it is that wants to retain guardianship. Again, with the trust, everything is listed on there, and that child automatically goes to the person that the grantor, the trust owner, lists under trust. People also have a misconception. Is, oh, I don't need a trust, George. My house is only worth 300,000. I'm going to go ahead and I'm going to add my kids on the deed. Bad idea. And I explained to them why that's a bad idea to add anybody to your deed. You're just inviting somebody to come in and try to place a lien on your property if you add somebody's name on there. But people think, well, I don't have a whole lot of assets. I don't even have a house. I do have $400,000 or $500,000 in the bank. You know, like I said previously, anything over 150,000, it will go through probate. The state of California will freeze your assets, and the only way to unfreeze them is to have the probate tax paid. If it doesn't get paid, the state seizes it. So it doesn't matter if your house is worth 300,000 or 100,000, $1 million. You need the proper protection. Now, also in a trust, you can also be as intricate and as detailed as you would like in regards to how it is that you want to leave an asset to a beneficiary. The only thing that I do tell my clients that's difficult is if they put stipends on there. Actually, this morning I met with a family and they were telling me, all right, George, well, you know, my youngest is 18. She's going to be starting school in a week or two. And I only want her to receive her inheritance if she has a bachelor's degree. It's hard. What if this child drops out of college and goes to a trade school and wants to become a chef or something like that? It's hard if we put these stipends in these trusts. You make the job of the executor a lot more difficult, and it gets a little bit more difficult for the trust to be managed. But if that's what a client wants, there's ways for us to go ahead and do that. But I do inform them of the possible headaches that we could have in the future. Here on this screen, you'll see the living trust is to basically maintain greater control over your assets. And again, your wishes are listed on there as to how it is you want your assets to be distributed amongst your death. Well, once you pass away, amongst your beneficiaries. Probate, again, probate can last anywhere from 18 months to 3 years. I've seen probate last, the longest one that I've witnessed has been 4 years. These clients did not have a trust. They had millions and millions of dollars in assets, and they actually lost closer to 35% of their assets to probate to the state of California. It's just a shame because this couple worked so hard. They were immigrants. They came to the US for a better life. They worked so hard. They purchased 5 or 6 houses. They were worth a lot of money. They died in an accident, and you know their children were left with nothing. The state actually sold all the properties at an auction, and their kids, even though they were adult children, they didn't get anything from the state. The state sold, paid off the attorneys that were involved, and paid off the CPAs that are contracted to oversee the probate. It's a headache. Again, the trust does include your declaration, your will. It includes also a healthcare directive, financial directive, and a certification of trust. Again, if you're married, there are 8 sections. Each spouse will have their own will, their own healthcare directive, and their own financial directive. If it's a special needs trust, that's something that's also incorporated in there. But like I said, it just depends on my client's needs. There could be anywhere from 5 to maybe 25 sections to a trust. Now, one of the important things, and Elizabeth can get more into it, is properly funding an estate plan. I'm going to give you a scenario right now. Let's say that my wife and I, we have minor children, and of course we have our home, we have a mortgage, we pass away, and we do have a trust. The trust will protect our assets from going to probate, but you know, we have minor children, or if our children are still in college, which we have one that's still in college, and they don't have the income, how are they going to be able to afford the mortgage, the property taxes, the upkeep, the repairs, the utilities? And that's why I educate my clients on the importance of having a properly funded estate plan. Because if you don't make the mortgage payments, you guys know what's going to happen to the house, right? It's going to end up getting foreclosed upon. And what was the use of having a trust? So it's very, very, very important to have your trust properly funded. You can fund it with life insurance, with investments, royalties, trademarks, patents. There's a lot of ways we can go about funding it, but the most secure way, for me, in my opinion anyway, is to have a proper life insurance in place. And also, one of the questions that a lot of clients ask me is, George, in the future, if I change my mind and I don't want to leave, you know, all my property to this person, or I want to make changes, can I? Yes. An estate plan, as long as it's not an irrevocable living trust, is 100% amendable at any point in time, as long as you are still of sound mind and body. If you've been diagnosed with some sort of disorder, Parkinson's, Alzheimer's, things of that nature, we cannot make any changes to it. Now, if you are married, your spouse does have the right to come in there and make some changes. But if you're single, it becomes very, very difficult, and somebody could actually object to the trust if they see that it's been modified and they know that you've been deemed incapacitated. So it's touchy, but generally we are able to amend it 100%. And we're able to amend all sections: declaration, the will, healthcare, financial, certification, everything in there. We can go ahead and amend. Now, some of the questions that I ask my clients when I sit with them are, I ask them, you know, who do you want to receive your property? So who are your beneficiaries? Do you want them to receive it outright, or do you want them to receive it over time? That way, some of my clients are worried that their children are going to run through all the money and then be left on the streets. If that's their concern, then we can go ahead and schedule it and set it up where they receive monthly stipends or annual salaries. However it is, they want me to set it up, we can go ahead and do that. And then I ask them, you know, we need to know who your executor is going to be. The executor is the person who's going to be administering the trust should the clients either become incapacitated or they pass away. If they have adult children and they confide in their adult children, and their adult children have their wits about themselves and are knowledgeable about the process, they generally name their adult children. But if they have minor children, they normally list somebody who they trust, because this person is going to have access to all of your information. Now, clients will ask me, well, will it be easy for this person to clear out my accounts and leave nothing? No, it's difficult to do, because once we transfer your property into the trust, when I mean transfer, I'm referring to your bank accounts, your deed, investments, any insurance that you may have. When it comes time for that executor to start administering and maybe taking some withdrawals from some of the accounts, the person at the bank, for example, will ask to see a copy of the trust so they can see exactly who this money is to be paid for. It doesn't have to be paid to the executor if the beneficiary is not a minor. If the beneficiary is not a minor, then the bank can go ahead and give the money directly to a beneficiary. But if the beneficiary is a minor, then yes, that money would go to the executor, and that executor, if they're trustworthy and they're honorable people, then they'll use that money to take care of the minor children. Same thing, if you become incapacitated, this executor is going to be responsible for taking care of you. This person is going to make sure that you're fed, that you're clothed, taking you to your doctor's visits. You're going to have access to your financial records. So that's why it's important to name somebody who is very, very trustworthy. And most people, I believe most people have a good heart, but I have seen what money does to people, and I have known people who I thought had a good heart, and when they see what's happening here, they completely change. But like I said, with a trust, it's difficult for somebody to come in and swindle you out of your estate. Advantages of a trust: you completely control the trust while you are still of sound mind and body, and you're still alive. Also, depending on the type of trust, there's creditor protection. If somebody is suing you and you have an asset protection trust, they cannot come after your assets. Also, we can manage the property in a trust as long as you're alive. If you're incapacitated, the trust will continue to do its job and protect you, and it'll manage the assets. We can also do tax planning trusts, and then again with a living trust or revocable trust, we're able to avoid probate, which is the biggest thing here. And then we have unified buckets here for assets. So we can leave different assets that you may have to different beneficiaries. You can list that that all your beneficiaries receive equal percentages, unequal. However it is that the client asks me to leave their assets, that's the way that we go about it. The directives: a living will, healthcare, and a financial power of attorney are all directives. People always ask me, George, what's the difference between this will that you have in the trust and the last will and testament? Well, this will, the living will / pour over will, works a little different than the last will and testament. The last will and testament must be recorded with the probate courts, so that when you pass away, the court actually has, for example, they actually have your will, and they see who your beneficiaries are, and it makes it easier for the court, for the state, to know who to go after to ask for the probate taxes. The pour over will or living will that we do here for a basic living trust, it's the same, but it does not have to be recorded. It is all part of your living trust, and your assets are all listed there. Your beneficiaries are listed there. If, God forbid, we forget to include an asset into your trust, your pour over will is almost like an umbrella that covers all of your assets. As long as we can prove to the probate court that the asset was acquired after or during the process of creating your estate plan. Again, the healthcare power of attorney, you're giving somebody power of attorney to not make your healthcare decisions for you, but to make sure they honor your healthcare. The clients that I've met with earlier this afternoon, they told me, hey, George, the doctor tells me that I have an incurable illness. There's no remedy for me. I don't want to suffer. I don't want to be on life support. I just want to go as quickly as possible. That way, if you list that in your healthcare directive, you're not leaving the responsibility of some person to make the decision. Oh my God, I don't know what to do. You know, should I pull the plug? Should I leave them? You already made that decision, and it's their job to just hand that healthcare document over to your physician, and then they'll take the rest. With the financial power of attorney, it's somewhat similar. This person will have the power of attorney over your accounts, anything that has to do with finances, your home, governmental benefits, lawsuits. This person, the same thing, they have to abide by your wishes. And that's why I was telling you previous that when you take your booklet over, let's say to the bank will ask to see it. And then that way they'll know who the beneficiaries are and who is that's going to be receiving the funds. Another thing that I wanted to tell you also regarding the healthcare directive, we also have the your final arrangements, which for a lot of people is a touchy subject. That's when we ask, you want to be buried, cremated, where do you want to be buried? Everything gets listed on there. If you want to be an organ donor, if you already are an organ donor, let's say with the Department of Motor Vehicles, DMV, it all gets listed there, and it makes your executor's job a lot easier because everything is already listed on there. How often should you update your plan? I contact my clients 3 to 4 times a year, so maybe every quarter. I will send them a letter. I'll send them just a hope everything is okay, what I call hope everything is okay letter. I do send them an annual review letter every January. I also send them, a happy birthday card, a happy holiday card, and I just let them know that I'm always there for any and all needs that they may need me for. But I do tell them that if there's been any major changes in their life, whether it's a divorce or they've been married or there's a new child or a grandchild, because some clients want to leave assets to their grandchildren, I ask them, we should meet at least once a year. I know here I listed 3 to 5 years, but on average every year. And if everything is fine and there are no changes, most of my clients will either email me or just give me a call and tell me, George, everything is good. There have been no major changes to anything here, so we don't need to get together. A fiduciary. Fiduciary is another word for an executor. What's an executor? An executor is the person who, as I previously mentioned, this is the person who's going to be managing your trust should you become incapacitated or should you pass. This person will take it and will make sure that your wishes that are outlined in your trust are followed. Trustee, the trustor, the grantor, it's actually the person who owns the trust. It's the owner of the trust, husband and wife, or the domestic partners. And then again, here you see guardian of minor children. So we're able to list guardians if you have minor children. Again, if you have children with special needs, this is really, really important here. You can do an individual estate plan. You can do a one with your spouse. And then for your executor, it doesn't always have to be a specific person. There's some of my clients that ask me if I know of a corporation or a professional fiduciary or professional executor that will actually do the job for them. And I do have some companies that I work with, but I do let the clients know that there are fees involved and it is very expensive. If they don't mind it, I put them in contact and we take them from there. But if they don't have a huge estate and they don't want to pay all of these fees, then they normally name either a good trusted friend or a trusted relative that they have. When it comes to creating any type of trust, I always tell them that the goal that they should have is number one, to protect their assets. Therefore, they can create a legacy and leave a legacy for their children. They can care for themselves and for their family, avoid the probate tax. And, it's something that is needed because none of us are promised tomorrow. And God forbid something happened. I'm gonna give you a quick scenario with my dad. My dad at one point had 8 properties, investment properties from Sausalito to San Diego. And for 8 years, I would tell him, Dad, it's important that you have a trust. You came to this country, with nothing. You saved your money, and at 18, you began to start building your real estate portfolio. You need a trust, and typical Latin male comes back at me and was telling me, no, you and your mom just want my assets. You guys want me dead. You guys just want to take everything from me. And I said, no, Dad, that's the last thing you want to do. You know, God forbid something happens to you and my mom. My sister and I are going to be on the hook for the probate taxes for these properties. And I don't have $2 or $3 million in the bank. Some of you may, but I don't. And so for 3 or 4 years, I think, no, I'm sorry. Yeah, 3, 4 years we're back and forth, but it took 8 years for him to finally said, okay. But the reason why he decided to move forward is his best friend and wife passed away. And he saw what the state of California did to the properties. The 3 properties that his friend Kenny had were seized and sold at an auction. Kenny had 3 minor children. I believe there were 10, 8, and 5. Each one of those children, DCFS came, picked them up. Kenny's sister-in-law had to hire an attorney and go through the whole process of adopting them, when that all could have been avoided if Kenny had a trust. So it took that for my dad to open his eyes and said, hey, son, you know what? Okay, I'm ready. Let's go ahead and move forward. I want to do this. I now see the need for having this trust. And so we move forward and we did it. The trust, I tell everybody, it's like a safe. It stays closed, and then your executor has your combination or the key to open it once you become incapacitated or you pass. At that point in time, the executor takes over. Otherwise, everything is business as usual. You and or your spouse are in control, and it's that simple. Here now, you'll see if you have any questions. There's my name. There's my phone number, and there's my email. Any questions, concerns, please feel free to reach out to myself or to Miss Elizabeth, and we'll be more than happy to sit with you and answer any questions or concerns that you may have. Now, with that said, that portion of it is done. I'm going to introduce Miss Elizabeth. Now, let me tell you about Miss Elizabeth. She was in the financial services industry with TransUnion, yes?
Yes.
TransUnion and the other one confused, but she was there for 19, 20 years. A great person, great business partner. And now I leave it up to you.
Thank you so much, Jorge. Great job. I always learn something new. I love that presentation. Thank you so much for all that information. All right, guys, I'm going to share my screen. I'm going to kind of, continue on to how you're going to fund the Living Trust. Let me share my screen. All right. Everybody see my screen okay? Can I get a thumbs up? I'm going to move this here. Hold on, sorry, 1 second. All right, guys. So I'm just going to start off with a couple of interesting facts. I always like to get everyone involved. I know that sometimes it is 7:30 in the evening, so some of you guys are probably winding down. Want to get you guys involved, so I want to ask everyone to unmute themselves and participate at least on this first slide here. Okay, so 57% of people do not have life insurance. So there are about 13 of us on here. So that means 57%, more than half of us on this call today do not have any life insurance. And you all know who you are, right? So 40% of the people that do have insurance actually feel that they don't have enough. And then one out of the 3 people that do have insurance have it through work. So that means if you do have insurance through work, that's wonderful. Although a lot of you might be agents and you're independent, but if there's anyone that is employed, a lot of times people that do have insurance through work have a term policy that generally expires, and it also is not always portable. So if you change jobs, it doesn't always allow you to take it with you. One little fact that I uncovered while working with someone that works for the police department is that, yes, he has life insurance, and yes, he gets to take it with him when he leaves his job, when he retires. The only thing they don't tell him is that when he turns 70, his insurance is no longer in force. How many people think you actually need life insurance after you turn 70, right? So that's something that was very surprising to me, that a police officer had insurance, was able to take it with him and expired at age 70. That was shocking. Okay, here comes a couple questions. So I'll have everybody participate. What percentage of people have a long-term financial plan? Any guesses?
40.
A little bit less. Any other guesses?
35.
It's actually 30%. What does that mean?
I chatted 35.
70% of the people that we encounter on a regular basis do not have a financial plan. What does that mean? It means that they haven't really thought about retirement. They haven't really thought about saving. So how are you going to get to your destination, which is ultimately to retire, or at least have the opportunity to retire if you don't have a plan in place, right? You got to think about that now. Compound interest and our money compounding over time is what's going to allow us to live that second half of our life. We're living a lot longer these days, so we're going to need more money to live, you know, our golden years. We want to make sure that they're golden years and not terrible years, right? So another question, what percentage of people have less than $1,000 in their bank account? This is scary, guys. Any guesses?
20%. A lot more people. A lot.
80%.
50%.
65%.
It's 56%. That's pretty scary. 56% of people do not have enough money if they have an emergency come up, or they lose their job, or they become incapacitated. All of a sudden, they can't pay their mortgage, right? So they're going to be calling you to say, hey, I'm going to have to sell my house that I just moved into maybe last year or 2 years ago, or whatever it may be. It's never a good time to have to sell your house because you can't pay your mortgage. All right, some of the reasons to get life insurance. Replacing lost income during illness. A lot of people become incapacitated unexpectedly. Nobody ever plans on getting sick, right? No one ever plans on getting on a car accident, but it happens all the time. Getting your funeral expenses covered. I mean, dying is not cheap, people. I don't know if any of you have shopped for your little plot, but I know a few people that are really adamant about having that expense covered because it's at least $20,000, if not more. If you want to go out with a mariachi and the doves and make it a beautiful, you know, it's expensive. I know we're laughing kind of, but it's true. You know, some people have, you know, these wishes that they want a really elaborate funeral, and the people that we love, we want to give them their last, you know, their last goodbye in a beautiful way. So I would want to do the same thing for my loved ones. So transfer of wealth, you know, 45 million households out there that are passing $68 trillion of wealth to their children. There's a lot of people out there, baby boomers every year, where thousands and thousands of people are retiring, and they're passing on millions and millions of dollars in wealth to their children if they have a living trust, right? I mean, they're going to pass a lot of that money on, but how difficult is it going to be for the people that are inheriting all this wealth to actually take over that wealth in the most beneficial way? You know, that's where the combination of what I do and Jorge together, we can put a plan together to protect all that wealth. Benefits of life insurance. You know, nobody plans for this, but it's going to happen, and we just don't know when. It allows for the family to grieve without being too concerned about paying the bills. I don't know about you guys, but the thought of, you know, my family member passing away, I can't imagine I'm going to have the kind of energy I have right now to get on a call and talk about life insurance and try to keep my, you know, my income going. It's going to allow me time to have that money to pay my bills and grieve properly. It's also going to allow me to decide, what do I want to do with the house? Do I want to sell it? Do I want to stay here? And in the meantime, I have to keep paying that mortgage if it's not paid off. So these are things that you know, are the reasons why having life insurance is beneficial. And generally speaking, those the death benefit money is tax-free. So there's events that we know are going to happen for sure. We know we're going to retire. We know we're going to pass away eventually, but there's things that we really do not know. You know, more than 50% of people get divorced. We don't ever plan, we don't get married thinking, oh, we might get divorced. It happens a lot. Bankruptcy, a lot of people are filing bankruptcy right now during coronavirus. A lot of people are struggling and they're having to, you know, file bankruptcy. They didn't plan for that. And a lot of people didn't plan on getting laid off either. How many of us could ever imagine that there would be 40 million people applying for unemployment because of what's happening in with the coronavirus? That's a lot of people with no benefits, no health benefits, no life insurance. I can't tell you how many people I speak with that tell me, Elizabeth, I'm good. I have insurance through work. And what happened? What about all those 40 million people right now? They don't have insurance through work anymore. And now a lot of those people have worked at their jobs for 5 years, 10 years, even 20 years. I worked at TransUnion for 19 years. I had life insurance through my job. And I was 20 something when I started and I was 40 something when I left. Do you think my insurance is going to be more expensive when I'm 28 versus 48? I'll show you guys an example. So what if you become incapacitated? We're talking about what if. And we know, I'm sure that everyone knows someone that's close to them or has had an experience where they were incapacitated, even if it was for a short period of time. Every 45 seconds, someone has a stroke. 6 in 10 Americans live with at least one chronic disease, which is diabetes or a heart problem, something where it's chronic. They've had it for a year or more, and they have to be on, you know, monitored regularly by their doctor. A cardiovascular disease is the number 1 cause of death amongst men and women. Okay, now the big C word, cancer. 38% of Americans will have some type of cancer in their lifetime. I know several people who've had cancer, and I'm sure you all know someone if you haven't been one of those people that have been affected and survived. And if you do have a chronic disease, you're going to have to probably be on disability, which means you're going to have to learn to live on 60% of your income. Most people live paycheck to paycheck these days. They can't live on 100% of their income now, and they're going to have to live off 60% of their income if they become disabled or incapacitated. And as many of you know, the number 1 reason for people filing bankruptcy is due to medical debt. If you do have life insurance, do you have living benefits? That is a big question, and I can't tell you how many people I talk to on a regular basis that tell me I have insurance, and I always say that's awesome. And they don't want to really talk anymore. And I say, okay, you don't need to talk to me. I just want to give you one piece of homework. I want you to go home, pull out your policy, call and ask if you have living benefits. Just do that. Just don't do it for me, do it for you. And some people don't know what it is, including an attorney I met with a couple weeks ago that's an estate planning attorney. He had no idea what living benefits were. So living benefits include a terminal illness. A lot of carriers do offer the terminal illness. So if you're diagnosed with a terminal illness and you're going to pass away in the next 18 to 24 months, they'll give you the money, you know, prior to you passing away. Critical illness. So if you have a cancer, a heart attack, or stroke. Critical injury. I always use my mom as an example, guys, because I lived this with my mom. She had a major car accident 2 years ago, just her anniversary just passed, and she broke her neck. She was incapacitated for several months. She survived and she had insurance, but she had the old kind of insurance. And this is something that a lot of people need to really think about. Okay, I have insurance. Everyone thinks they're fine. But my mom's insurance had no living benefits because she purchased her insurance back in 2003. Living benefits were not available in 2003. Living benefits became available over the last 10 years. So my mom was in the hospital for a month and at home recovering for another 2 months. During those 3 months, we had to keep paying the mortgage, right? However, we had to pay all the bills, electricity, food, everything. And we didn't have any other source of income to pay those bills, but what I had and whatever savings she had. If she would have had living benefits, she would have been able to activate those living benefits that are part of the life insurance policies that I offer that will pay you a monthly amount of income for you to take care of whatever bills, whatever you need to pay, whether it's electrical bill, your car payment, whatever it is. That is very important. And I've seen, now that I've connected with so many people on Facebook, I see so many people passing away, whether it's COVID or not. A lot of people going to funerals, a lot of people setting up GoFundMes. When I see people setting up GoFundMes, it just breaks my heart. To think that you can't give your family a proper burial and that you're going to have to go out and get a loan to pay for the funeral, that is absolutely heartbreaking. So just keep that in mind, that not all insurance carriers are created equal either, because many of them, if you call and you say, do I have living benefits? And they say yes, you want to ask another question. That question is going to be, which living benefits am I covered for? Do I have terminal? Do I have critical illness? Do I have critical injury? Because a lot of carriers only offer the terminal part of the insurance. Average monthly cost of insurance. We all have to protect all the things that we have, including our homeowners, right? You guys, a lot of people are real estate agents, they own a home. Homeowners insurance on average is about $100 per month. Your car insurance, you have to have car insurance. You hope you don't use it, but you have to pay for it, anywhere from $80 to $100. Your cell phone, about $15 per month. Renter's insurance, anywhere from $15 to $25. What about your life insurance? How much is that? How many people would agree that your life is worth more than any of these physical things here? Is your life worth more than your phone, than your house? I'll tell you what, when my mom had that accident, I would have paid anything to make sure that she survived that accident. And no house was worth her life, no cell phone, and no renter's insurance or anything like that. So keep that in mind. I'm going to share with you guys, the longer you wait to get life insurance, the more it's going to cost you. So I'm going to share with you real quickly here the average cost. I've kind of used 500,000 just to kind of say, okay, if they have a mortgage on average, I think that's kind of what homes are running right now, an average home. And I want to show you the difference between a 35-year-old male and a 45-year-old male. Keep in mind, men usually have a shorter lifespan, and their insurance is always a little bit higher than us women. All right, so here is a 30-year term policy. Keep in mind that, you know, this all depends on the client and everything is tailored to the client, but I just want to give you guys an example because there's a misconception that life insurance is not affordable. And so here's a 30-year term for a 35-year-old male for $500,000 for $78 per month. Now, I don't know about you guys, but I've gone out to dinner and drinks and spent more than that. So I think that having this coverage is absolutely doable. And this is someone that's 35. And what I want to share with you is the living benefit piece. If this person, this male, became incapacitated at age 37 with a $500,000 policy, he would get $2,700 per month while he's incapacitated. Generally speaking, it's a maximum of, I think it's 36 months. And then $3,000 if he had an accident or became ill at age 39. So, and that all depends, the amount that you get on a monthly basis is going to be based off of your death benefit. And then I want to show you, this is so $78, $79 for 500,000 for a 35-year-old male. And here it is if you are a 45-year-old male. When I tell you that waiting is going to cost you, this gentleman, John Smith, at 45 years old now, at same amount of coverage, 500,000, is now going to pay $177 per month. And if he were to become incapacitated, if he had a terminal illness, and here's something I like to point out, he would get a lump sum of $426,000 up front before he passes away. Maybe his last wish is to travel to Europe with his family for 2 or 3 months. Well, the insurance company will give him that money and he can fulfill his last wishes with that money if he chooses to do so. So if he were to become sick or have an accident and incapacitated at age 47, he would get $4,000 and so on and so forth. So that just kind of gives you a little example of what a difference 10 years makes in terms of health and the premium. Now, you know, 10 years is a long time. I might be really healthy right now, and in 2 years I might get sick, but we don't know that. We have to plan for today and hope, you know, that nothing happens and we don't need it, but that's just the way we have to plan ahead. And my last screen here. So having peace of mind is the most important thing. I think, you know, oops, I went to the first one. Sorry about that. Let me go back here. My last slide here, and we'll wrap it up. So just think about, you know, I know there's people here that are agents and you're probably also homeowners. Oh my gosh, sorry guys. You know what? Let me just, I don't know why it keeps jumping to that screen. My apologies. So this is just to say, you know, how would you feel if you had to call your agent to say, hey, I need to sell my house because I got sick or I got in an accident. I can no longer afford this. Or, you know, my husband passed away or my wife passed away. So that's just something to think about. I know we talk to so many different people. We come across so many different people in walks of life. So sharing this information with someone that you care about is really a gesture of love. So I think that, you know, if we're able to share knowledge with someone, that's what Jorge and my goal, #1 goal, is to share knowledge with people so that they can make informed decisions. And now that you've heard this and you know it's out there, at least you can take time to take inventory of yourself, your own life, and your loved ones, especially those closest to you. But especially for those of you who are agents, you give the biggest dream to people is to help them get their home. That's their largest asset, their most precious asset. So sharing this information with them is something that is going to make you allow you to provide even better service to your clients. So, and the biggest enemy to all of us, to our money, is procrastination. So be proactive. You don't want to be reactive. You don't want to, I have a list of people that have medical conditions that I'm trying to get them insured, but it's not going to be cheap. Do it now that you're healthy, or even if you have a minor condition, we can still get you insured. Be proactive and review your plan. Share this information with everyone that you know. And if you guys have any questions, Jorge and I are here to answer all those questions for you. But thank you so much for your time this evening, and we look forward to connecting with some of you soon.
Thank you guys so much. Thank you, Elizabeth. Thank you, Jorge. I appreciate you guys, you know, joining us this evening. And if you don't mind unsharing your screen,
oh, yes. Sorry,
real quick.
Sorry.
No worries. No worries. Like I said, thank you guys for your support. And, you know, we're, you know, as some of us are agents, some of these are my clients, and it's important for us to, you know, not only help you guys obtain the home ownership and, you know, be proud of what you work hard for every day. But I can't tell you how many times, you know, we do get those calls. You know, my mom passed away now, what, you know, maybe it doesn't pertain to their home, but it pertains to a family member's home. And I guess I'm getting that age because I think it's happening more often than not now, where we are getting those calls. So I just wanted to, I don't know, I put everyone who I believe was on the call. So I did say that I wanted to offer 50% off a living trust for, you know, someone on the call. So I wanted to give that away right now while you guys are on the call. So I'm going to try to do this. Okay. So give me just a second. I'm going to try to share my my phone here. Let's see. I usually have my assistant here helping me, but she's not here right now. So let's see if I can do this. Of course not, right? And let me see. Well, I guess I'm not going to be able to do it for whatever reason. It's not finding it, but I guess I'll do it this way. I was going to make it easier that way, but it didn't work that way. So what I'm going to do is, and I hope you guys can see this. So I have, it's going to be like, I don't know if you guys could see it, kind of, sort of. It's going to be a wheel. So I'm just going to spin it. And I have everybody's name that's on here, okay? So I'm going to hit spin. And so here's everybody's name that was on the call. And let's see who our lucky winner is. Hold on. I'm trying to figure this out, so bear with me. I've done this before. Okay, there we go. There it goes. Okay, it's spinning. So let's see who our winner is. Can you guys see?
It's hard to see.
Christina.
Is this Christina?
Yeah, Christina. Yeah. It says right here.
Yay!
I don't know if you could see it or not, but well, you can't see it. Well, Christina's actually one of my clients, so that's awesome.
All right. That's wonderful.
So congratulations, Christina. Thank you for joining us.
Yay! I was like, how do you use this thing, babe? Oh, I'm so happy. Okay. Thank you.
Yes, thank you for joining us. So we'll be in touch with you on how to get that going. I'll connect you with George and with Elizabeth so that way they can spend the time with you and make sure that you guys are set up. And actually, Christina is in law enforcement. So really good for her to know what it is that she has, you know.
Yeah.
So thank you, Christina. Okay, congratulations.
Thank you very much, Sonia. Thank you.
Yeah, you're welcome. And if you guys, again, you feel the need for this, please don't let money stop you, you know, because it's only cost you more later. You know, that's the thing that we really, really need to, we, like you say, we spend money every day on Starbucks and on things that aren't good for us, that are killing us. So we got to take care of ourselves and our families. So again, thank you guys so much for joining us. And again, thank you, George and Elizabeth. Appreciate your knowledge. And if anybody wants more information, we will probably do this again, to be honest. I think it was wonderful. So we'll do it again.
Thank you so much.
Great.
We feel so blessed to be able to share all this information with everyone. And I'm so excited for Christina.
Yes.
Yeah, thank you. Thank you for everything. I appreciate the time.
Okay, thank you guys. Have a good night.
Good night, everyone. Thank you.
Okay.
Bye.
Okay, bye-bye.